All right, today we're digging into a really fascinating and frankly contrarian economic report. It asks a huge question. What if a massive technology boom, led by AI, is so powerful that it can just completely overwhelm all the negative stuff from protectionist policies? Let's dive in. So where's this all coming from? Well, our source is this deep dive from Hudson Bay Capital. It kind of paints this picture, right, of the mood after what it calls the Liberation Day tariff shock. And boom, just like that, the consensus view on the U.S. economy, it just tanked. Everyone got really pessimistic really fast. And what was everyone so worried about? Well, it pretty much boiled down to a few big fears. That these new tariffs would kickstart a recession, that the whole idea of U.S. exceptionalism was basically over, and that the stock market was just a giant bubble ready to pop. This became the story everyone was telling, and it happened in a flash. Okay, but here's where it gets interesting. This report, it just throws a huge wrench in all of that. It asks a really simple but kind of profound question. What if everybody's got it wrong? What if all that doom and gloom is missing a much, much bigger story playing out behind the scenes? So what's their big counter-argument? Well, it all comes down to one thing, just one really powerful force: technology. The way the paper frames it is like this epic tug of war, a battle between two huge opposing forces. In one corner, you've got these nasty stagflationary headwinds. That's a really toxic mix of slow growth and high inflation, pushed by things like tariffs and big government deficits. But in the other corner, you've got these incredible technological tailwinds. AI, automation, all that investment in data centers, all pulling in the exact opposite direction. And all of that leads to the paper's super bold, central claim, and it's just 3 words. Tech trumps tariffs. The idea is simple, right? The good stuff from technology is just going to be so powerful, it'll completely overpower the bad stuff from tariffs. Okay, so to really get this, we need to talk about a cool economic idea called a positive supply shock. Just think of it like we suddenly discovered a brand new, super cheap, massive source of energy. It's the best of both worlds, right? More growth and less inflation at the same time. It almost never happens. And the report, it's arguing that AI, that's our positive supply shock. All right, that is a huge claim. So you've got to ask, where's the proof? Where is this massive productivity boom supposed to come from anyway? And this is where the numbers just get wild. The report is suggesting that AI has the potential to literally double the U.S. economy's potential growth rate. We're talking about going from its current trend of around 2% all the way up to 4% by the end of the decade. I mean, that's not just a little bump. That's a total game changer, a complete rewrite of what our economy is capable of. And look, this is way bigger than just asking an AI chatbot a question. The paper is pointing to a whole family of technologies that are all working together. You've got AI and machine learning, of course, but also advanced computer chips, robotics, huge breakthroughs in biotech, even things like quantum computing and fusion energy. It really is a massive, broad revolution happening all at once. So, who's winning this tech race? It's a key question. The paper's pretty clear. Yeah, China is ahead in things like green tech and electric cars. But, and this is a big but, it argues the US has a major lead in the foundational tech, the stuff that everything else gets built on. Things like AI, semiconductors, and quantum computing. Okay, so you might be thinking, this all sounds great, but what about those bad policies? Won't they just mess everything up? Well, the report has an answer for that. It talks about these powerful institutional guardrails that act like a safety net, limiting how much damage those policies can actually do. And there are basically 4 of these guardrails. First up is market discipline. If a policy is really bad, the stock market tanks, and that sends a very loud message to Washington. Number 2, an independent Federal Reserve which can fight inflation without political pressure. Third, you have savvy economic advisors who can steer things in a better direction. And finally, number 4, you've got Congress and the courts, which can put a limit on what a president can do all by themselves. So what does all this mean for you, for your wallet, for the markets? This is where the theory hits the real world. And the takeaways are pretty huge. First, let's talk about the stock market. According to the report, if this AI boom is real, if we're in what it calls an optimism regime, then forget about a bubble. The S&P 500's fair value could actually be way up around 9,000. That's a massive difference from the 5,200 you'd expect in a pessimistic chaos regime. It just totally changes how you think about whether stocks are expensive right now. And what about the national debt, that thing everyone's always worried about? Well, here the story gets a whole lot better. See, normally that debt to GDP ratio looks pretty scary. It just keeps going up. But if AI boosts growth, the GDP part of that ratio gets so much bigger so fast that the whole thing actually levels out. The debt suddenly looks way more manageable. And this leads to a really powerful takeaway. The best way to fix the debt problem isn't necessarily painful budget cuts or higher taxes. It's just to grow. Growing the economy faster is more effective, and let's be honest, a lot easier politically. In this view, growth is the magic bullet. Okay, last one, the US dollar. You know how you always hear that the dollar's reign is ending? Well, this report says not so fast. Why? Simple. A huge tech boom in the US would be like a magnet for money from all over the world. All that investment flowing in would prop up the dollar, especially when its rivals have their own big problems to deal with, like capital controls. Okay, let's step back for a second and look at the big final takeaway from this whole contrarian view of the economy. It really all boils down to that battle we talked about earlier. The report's final verdict is just overwhelmingly optimistic. It's saying that in the long run, the incredible power of technology is the main event. It's the big wave. And all the bad policy stuff, that's just noise. It's just friction that the wave will eventually wash over. And there's a quote in the paper that just nails this idea. It's all about faith in the private sector's energy. You know, its dynamism, cranked up to 11 by technology. That combination is strong enough to just power through all the political drama and turbulence. So we're left with this one last really big question, right? At the end of the day, what's going to define our economic future? Is it going to be the policies we choose, or is it going to be the unstoppable march of the technologies we invent? This report, well, it makes a really, really strong argument that technology is the one to bet on.